Now we are going to learn about the methods of computing carbon accounting. Scope 1, the cadastral approach. This calculation scope only includes direct emissions from energy products held by the reporting organization. In other words, the scope includes everything that comes from energy emitted directly by the organization, state or company, regardless of its radius of influence. This represents direct emissions generated only within the organizational scope. Scope 2, the voluntary approach. The scope of analysis of scope 2 extends the study of the organization's emission by adding to scope 1 all the organization's indirect energy emissions. In other words, all carbon emissions from an energy product reported on the organizational scope are taken into account. For example, electricity generated outside the organizational scope and consumed within it is included in scope 2. To integrate this approach to its carbon footprint, it is therefore necessary to access the carbon emissions data of the energy providers and producers with whom the organization works. Scope 3, the voluntary approach, second part. Scope 3 then broadens the operational scope since it seeks to express all the carbon emissions of the organization radius of influence. This scope is complex to access given the large amount of data to be included in balance sheet and the difficulty of access. For example, an organization that takes into scope 3 should evaluate the entire purchasing chain, its entire transport chain, and its consumables and waste.